Most people look for wealth where the noise is loud. Headlines, prices, charts that move fast. But the largest fortunes are rarely built where everyone is staring. They are built where almost no one is looking, and where time does most of the work. This is one of the hardest ideas to accept. If something is obvious, it is usually already crowded, and crowded places rarely create outsized gains over long periods. They create competition. The people with the most money do not compete loudly. They position quietly. That is why the most important assets are often the least talked about. Not because they are secret, but because they are boring, slow, and misunderstood. History shows that when systems change, wealth flows toward control, durability, and leverage over time, not excitement. This is why many very wealthy people ignore what everyone else is arguing about and focus on assets that sit underneath the system itself. The first of these assets is control over real-world bottlenecks. A bottleneck is something everything must pass through, but few people notice. Roads, ports, pipelines, warehouses, data corridors, payment rails, licensing rights, access points. When you control a bottleneck, you do not need to predict demand. Demand comes to you. During booms, bottlenecks get busier. During recessions, they are still used. During crises, they become critical. This is why control beats ownership of fashionable products. Products change. Bottlenecks endure. Rome did not fall because it lacked goods. It fell when it lost control of roads, grain routes, and tax collection. Modern systems work the same way. If everything must pass through you, time works in your favor. Bottleneck assets are ignored because they look dull. They do not grow explosively. They grow steadily, quietly, but steady control compounds faster than speculation over decades. The second obscure asset is optionality embedded in flexibility. Most people think assets are things, but some of the most powerful assets are structures that allow choice. Flexibility is an asset, cash with no obligations. Businesses that can switch markets, skills that transfer across industries, legal structures that allow quick change, contracts with escape clauses. Optionality means you are not forced to act when conditions turn bad. History shows that collapses punish those who must act, those with fixed costs, fixed income, fixed geography, fixed assumptions. The wealthy avoid rigidity. They do not maximize returns in perfect conditions. They minimize damage in imperfect ones. This looks conservative. It is not. Optionality allows you to wait while others rush. When prices fall, those with flexibility buy calmly. When systems change, they move early. When rules shift, they adapt. Optionality is invisible until stress arrives. That is why most people undervalue it. But every crisis rewards those who can say, "I can wait." The third obscure asset is influence over information flow. This does not mean news channels or social media fame. That is noise. It means access to raw data, early signals, and decision-making context. Knowing what is happening before it becomes public changes outcomes dramatically. In the past, this meant shipping logs, trade routes, and crop reports. Today, it means supply chain data, traffic flows, transaction patterns, and system metrics. Information advantage does not predict the future. It shortens reaction time. Shorter reaction time is power. Most people react after prices move. Those with information react before pressure builds. This is why large fortunes gravitate toward infrastructure, analytics, and systems that sit close to real activity, not opinions. Measurements. When you measure reality faster than others, you do not need perfect predictions. You adjust sooner. This is another uncomfortable truth. Wealth is rarely about being smarter. It is about being earlier. Early does not mean fast trading. It means early understanding. These three assets share a common feature. They do not depend on public excitement. They depend on structure. Bottlenecks control flow. Optionality controls timing. Information controls response. None of these look impressive in a bull market. They shine in transitions. Transitions are where fortunes change hands. Most people build their lives assuming stability. Stability is temporary. Those who understand this do not panic when systems shift. They prepare. The mistake people make is thinking wealthy individuals chase returns the same way everyone else does. They do not. They chase resilience. Returns are a side effect of survival. Anything that survives multiple cycles eventually outperforms things that collapse once. This is why quiet assets matter more than loud ones. Gold is loud, Bitcoin is loud, stocks are loud, infrastructure is quiet, flexibility is quiet, information is quiet. Quiet things compound. Another pattern appears when you study long-term wealth. The wealthy avoid assets that depend on one story. Stories change. They prefer assets that work under many stories. High growth, low growth, inflation, deflation, peace, conflict, bottlenecks still operate. Flexibility still matters. Information still gives advantage. This is not brilliance. It is humility. It is admitting you do not know the future. Most people fail because they bet on one outcome and build their lives around it. History punishes certainty. The people who survive and grow accept uncertainty and position around it. This is why their moves look boring. Boring is robust. The reason these assets feel obscure is because they do not produce excitement. They produce stability. Stability does not trend, but stability survives. There's another reason these assets are quiet. They require patience. Control assets take time to mature. Optionality feels expensive in good times. Information systems take years to build. Most people want results quickly. Quick results are fragile. Fragile things break under stress. This is why wealth keeps concentrating in similar hands across generations. Not because of conspiracy, because patience is rare. The system does not reward those who shout. It rewards those who wait with control, those who wait with flexibility, those who wait with insight. The average person is forced to act because their life has no buffer. The wealthy avoid that position at all costs. This is the real divide. Not intelligence, not morality, positioning. When the world feels calm, these assets look unnecessary. When the world feels unstable, they become priceless. That is why they are accumulated quietly. No one wants attention while building resilience. Attention attracts competition. Silence protects advantage. Most people will never notice these assets because they are trained to look at price, not structure. Price moves daily. Structure moves slowly. But structure determines direction. If you want to understand how wealth survives chaos, stop watching charts. Watch what cannot be replaced easily. Watch what everything depends on. Watch what reduces urgency. Watch what shortens reaction time. Those are the assets that matter when cycles turn. They always have, they always will, and they are almost always ignored right until the moment they are needed. By then, it is too late to build them. That is why they belong to those who thought ahead, quietly,